Hello, this is Edmund Shing from BCS Asset Management, looking at three aspects of stock markets today. We're going to look at stocks, we're going to look at bonds, and we're also going to look at commodities and foreign exchange. So three key market trends. So if we look at stocks first of all, how much more easy upside is there? The answer here on page 4 looks to be not very much when you look at the MSCI World Index. We have 2% to go after a 10% strong rally since the middle of October. So it would seem we're going to hit resistance at around 435 on the MSCI World, and likely we will not break it first time because this is rather unlikely. However, if we look to the US and we look to the arithmetic average index called the Value A index, you can see on page 5, you can see that the average US stock has already broken to a new high as of the end of November. So that actually is very bullish and suggests that we have further gains ahead from US stocks. Where would we look? Well, there are three sectors in the US which are in particular very strong. And these are firstly the semiconductor index, the line in black, secondly the biotech index, the line in yellow, and thirdly the media index, the line in green. So semiconductors, biotech and media all seem to be very strong in the US at the moment and are leading the market forward. What worries me a little bit, and why I don't think there's much more gain to be made in the short term, however, in stock markets, is the low level of the VIX volatility index. Here you can see it has already retraced from a high of 26 in October, now back down to a level of around 12. Given that the historic low was between 10 and 11, it suggests there isn't much further that volatility can fall. This doesn't mean that stocks can't gain, but it does make it more difficult. A second point which makes me a little bit concerned is the extreme bullishness of US retail investors. Here we have the AAII Bull versus Bear index, and as you can see, people are very bullish at the moment, much more bullish on the stock market than average, and usually this is a good contrarian signal, and that suggests that maybe there is a stock market correction coming because people are already so bullish. So that's a little bit concerning in the short term. Now let's turn on to another segment and let's look at bond deals quickly. As you can see here on page 10, we have three different bond ETFs of long government bonds. In green we have the Eurozone bond ETF, in yellow the UK government bond ETF, and in black the US long government bond ETF. As you can see, all have gained nearly 20% since the beginning of this year, but what we have now are very, very low bond yields. US 2.2%, Switzerland 0.4%, Germany 0.7%, to give you some examples. So the guess I have is that it will be difficult for bond markets to make much further gains in the short term, given how low yields are already. There is some suggestion on page 11 that commodities may be bouncing. Certain commodities such as gold and silver, for instance, are showing some resistance already. And this somewhat lies in opposition to what we see on the currency side, which is that this is, on page 13, we see the US trade-weighted dollar index. And we can see here that the US dollar against its trade-weighted comparators remains extremely strong in a very strong uptrend. So this suggests that either gold and silver continue to go up and the dollar stops going up, or dollar continues to go up, and what we see from gold and silver is a short bounce that will stop soon. So to summarise, I think in terms of stock markets we do see further upside ahead. We're at the seasonally strong period of the year, but there are some signs that we may have gone too far too fast. Sectors that are leading weight: semiconductors, biotech and media. In terms of foreign exchange, we still expect the dollar to continue to make gains going forward, and we will wait to see what happens with commodities after the recent sharp drop in crude oil, but the start perhaps of a bounce in precious metals, gold and silver. This is Edmund Shing saying thank you for watching and hope to see you again soon.